Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello, gold friends, checking in on the dollar on the hourly. So we have a very clear tightening range forming where we got our low of the pullback, high of the bounce, higher low, and we did get a little higher high here. Not significant, but it was a break. And we're still maintaining higher lows, but this is not a convincing turnaround at this point. We did not confirm the bullish reversal candlestick on the daily time frame. We will look at that in just a moment. So it's still pretty much an ideal day on Friday for the gold bulls and the gold miner bulls. So the levels I'm watching on the dollar are support here at 101.04 and 172. And I would put some support lines there to keep an eye on those levels and see if the bulls are able to maintain higher lows. And in terms of resistance, the bulls want to see a break of the recent high. And that level was up at 101.67. And then I'm looking up at the high of the original bounce attempt on that little dump. And that was up at 101.90. So 2 resistance levels to be watching, 2 support levels to be watching. And we should see a break once we get resumed trading here in the dollar. It's going to be an important day to start next week. And we see gold. Actually, let's look at the dollar on the daily chart to see that inability to confirm that bullish reversal hammer. So like I said, ideal scenario for the gold bulls not seeing a green follow-through day after the bulls bought that dip on Thursday. Weekly time frame also not looking like a bullish reversal candlestick, not a significant enough lower wick here. So it is still looking like the bulls are in control of short-term gold. Now, I did give my sentiment in the last video that I do believe the temporary top is in on gold, up in the 1206s. So we also looked at the potential when I did that video for a bounce and a rejection on the back test of 1200. That ended up being a nice quick trade, but the bulls did buy that dip. So a back test and rejection from 1200. We bounced off of 1187.71. I've got a support line there now watching that level, and then we're seeing a lower high. So it is still in a pullback. We'll stick that right on 1200 to watch that psychological resistance level. And that's the channel that we're currently watching here on gold. But again, you look at the daily time frame, and it's not a clear confirmation of that bearish reversal inverted hammer. So it's pretty much an ideal day for the bulls to remain in control. But look at the decreasing bull volume here. Look at the big upper wick. So still sticking with what I said in the last video, my sentiment saying that the temporary top, in my opinion, is in for gold. And I could absolutely be wrong. And if I am wrong, I will come on here and state that exact thing. But not going to lose sight of the overall uptrend because this is the clear level to be watching, 1177.08. If we were to lose that level, as you can see, the very bullish uptrend we've been on the hourly, that's the level where we would break this strong uptrend. So I'm not going to let my opinion, which I have given, sway my bias here. I'm not going to let my ego have me picture things that aren't occurring. So if we pull back and we pull all the way back to 1180, yeah, we had a nice pullback, but we are still maintaining higher lows. It's all about 1177.08, and the bulls will remain in control on this is the 4-hour chart now. I condensed it down a little bit, but they'll still be maintaining nice higher lows as long as that level were to hold. So clear range to be watching on both the dollar and gold. Heading into next week, let's check in on these miners. Going to be looking at GDX, which NUGT and Dust will trade based off of. So you can see the bulls bought the dip. We did get a lower high and a lower low, but we closed up near the high of the day. So the key support that I would be watching on GDX is the low of last week, and that's down at $21.90. And we can see clear resistance here at $23. We did close over it at the high of this bounce, but since then we've rejected from it about 4 times. So $23 psychological resistance. Bulls want to see a close back above that level, and a break of $21.90 would be bearish. The weekly time frame did reject from that middle Bollinger Band for the second week in a row. Look at the tight range on the weekly, where we have the 200-week support, held the low of the week, and the 20-week resistance rejected the price. So that's a little channel to update and watch those levels heading into next week. Checking in on GDXJ, the junior miners, which we have JNUG and JDST trading off of. And on the daily time frame for GDXJ, we've got the same thing with a lower open, a lower low, but the bulls buying the dip and closing at the high. So that level to be watching is the low 35.45 from Thursday, or make that Wednesday. And look at the clear resistance here at 37 psychological resistance. 1, 2, 3, 4, 5 rejections, pretty much all last week. And watching to see if the bulls can close over that level. And again, decreasing volume. Looks like the bulls are running out of steam a little bit, so we need to keep an eye on that and need to keep an eye on the gold volume as well. Weekly time frame for GDXJ did close above that middle Bollinger Band. That is significant, and it is technically a spinning top bearish reversal candlestick after a nice bounce here. So if we do pull back, I am liking the potential for the bulls to form a higher low and then see continuation to the upside. And again, the reason for that is because on this bounce, we saw nice increasing bullish volume on the weekly. So a little bit of conflicting information, the weekly time frame, really nice increasing bull volume besides this week, and the daily time frame, decreasing bull volume as we trade sideways and the range gets tighter. So this daily decreasing volume tells me that a break is imminent. Look at the last time we had that volume pattern occur. It was on a downtrend, and we leveled out, and the range got really, really tight. The volume completely dropped off, and then the breakout occurred on increasing bull volume 4 days in a row. So we're going to keep an eye out for a volume spike to indicate the tightening range here has broken, and we should see that next week. So volume is going to be very important, and those levels on the dollar and gold. There was also, I want to point out, the correlation between SPY, the S&P 500, and gold was pretty strong on Friday, and it was very clearly inversely related. And it seemed like every time we saw a significant little pullback in the S&P 500, then gold would see a nice move to the upside. So I would keep an eye on that correlation as well, because that definitely was in effect on Friday. And that correlation will change day to day. So it's important to be on top of it and just something to keep an eye on, because if you do notice that correlation in the morning and it continues to play out throughout the day and then you see the market dump, that can be an indication for you to jump into gold bullish, because you've seen how that pattern has played out so far that day. So we will check back in on gold as always. I hope you have a great long weekend, and we'll see. Not sure what I'm going to be up to on Monday, but could pop in and do a video Monday as well, even though the markets will be closed. So thanks for watching, and I'll see you soon.